this will be a pretty concise, straightforward presentation of understanding annuities and how people are using them, as it says here, securing their financial future. I find that, quite honestly, a lot of times there's a lot of confusion about annuities. So today, I want to give you just a full meal deal of the details. We're going to explore the world of annuities, their types, the benefits they provide, the role in retirement planning, which is important. Uh, Discover how these financial products can provide steady income and peace of mind for your golden years. Because the biggest concern I have people coming to me with today is, don't let me run out of money. And annuities can play a vital role in that process. Annuities provide safety and security in retirement. The guaranteed income, annuities can provide income for life, addressing longevity risk. Basically, you can't outlive your income. Gives you market protection, which is a big concern people have today, is that, we've got a new administration in place, and the market has been a little funky lately from the standpoint of some of these trade tariffs that the new administration is threatening to place. And of course, the market gyrates all over that. So, when it comes time for retirement, you don't want to retire at the wrong time when the market is down. And of course, annuities are very simplistic in their design. Annuities can simplify your financial planning as a retiree and going forward, whether it being an accumulation today or in the future. So the key is they're very safe, predictable tools to have. But annuities in your financial plan, the first thing you need to do is assess your needs and evaluate. And that means evaluate your risk tolerance and income requirements. I always like to say, on a scale of 1 to 10, where do you fall? 1 being bury it in the backyard and 10 being go to Vegas. Certainly at retirement, you're not going to be a riverboat gambler. So annuities can provide you with a predictable source of income, but it's important that you consult with experts. The key is understanding how the products work in an income process. You need to seek guidance from a financial advisor specializing in annuities, because there's a lot of companies that do offer them. Some of them are appropriate, some of them are not appropriate. And it's like, I guess, a nice fitting pair of shoes. They've got to be the right size, the right color, the right purpose to be a meaningful part of your retirement program. And number 3, there's diversify. You don't need to have all your eggs in one basket. You integrate annuities with other investments for a balanced portfolio. With our clients, typically, we use annuities as a foundation, and then excess funds can be invested in the market, managed for profitable growth into the future. But the benefits of annuities, they can provide you with a steady income stream. It provides reliable income during retirement that that will be coming in every month or every year, however you choose to take your distribution. And there's no surprises or gotchas, you might say. Secondly, there's, risk management. It offers protection against market volatility and longevity risk. Once you have an annuity in place, it's a contract between you and the insurance company, who typically is managing your money much more conservatively than if you're exposing yourself out in the equity markets, and you do remove the volatility so that your money is not bouncing all over the place. They do offer tax advantages. A lot of people will use some of their after-tax monies, like CDs and liquid assets, and put their monies into annuities. And what happens there is the tax treatment of annuities is the money grows tax deferred until you take it out. So it's a nice place to park your money. They're not too sexy or exciting, but they are predictable. And the most important thing is number four, peace of mind. It ensures financial stability for the long term. So that as a part of your overall financial plan, if you can plan for a steady, predictable, consistent income and you have monies above and beyond those, then that's, I don't like to use the word play money, but it's the money that you can take a little more risk with and grow with in the future. But in conclusion here, I think I missed one slide, Jeff. And I'll summarize that real quick here, is that, annuities come in various forms. You have fixed annuities, which are just simply that. They're fixed in interest. You deposit money, they pay you a guaranteed rate of interest for a guaranteed period of time. You also have variable annuities, which are, there you go. Well, I did jump past something, didn't I? Variable annuities, as you see on the right there, is that allows for the underlying investments into securities. And it gives you some exposure to the marketplace. But in my opinion, the only problem with variable annuities is you don't have an underlying foundation of growth that's guaranteed. If you happen to need the money when the market's gone in the tank, you can have an unpredictable source of income. Indexed annuities are kind of a hybrid between the fixed and the variable. They do guarantee return, but they combine the fixed and the variable features, and the yield on those type of annuities is tied to an index, not an individual share of stock. For example, like the S&P 500, and which is the most common index that is used. And typically with an annuity, that's an indexed annuity, the insurance company parks the money in the index where they're buying calls, put and call options. They guarantee your principal. And if you have an increase in value in that index that year, you get a stated credited interest rate. But the beauty of it is if the market goes negative and you have no growth in the index, your principal is still guaranteed, but you don't get any interest credit. So, that's a basic explanation of those types. Let's see if I can mess up here. No, here we go. Some common myths. Annuities aren't just for the wealthy. I remember, as a kid, you teachers having these, annuity programs that they funded toward their retirement so they would have a predictable income. So you have the ability to use annuities. Typically, we don't suggest a person put all their money into an annuity, but if you're looking for that foundation of safety, that's where it needs to be. Access to your funds, in an annuity, you do have access to it. Not only can you have a predictable income, but in an emergency, you can request a liquidation of part of the holdings to meet unexpected financial emergencies that you might have. But they do give you good competitive returns. Like I said, it's exotic. Again, then in retirement, you don't want to be in a position where you're not sure what's going to happen. And annuities give you that ability to level out your return, know what to expect. And then, of course, they are versatile in use. And again, here, a lot of people that we're dealing with use them to peg their incomes. But we also have clients that use them as a substitute for CDs at the bank. They're not FDIC insured, but typically the financial wherewithal of these insurance companies is substantial, and can provide the safety that people are looking for, especially in their retirement years. If you're in your 40s, 30s, and 40s, it's not as important as it is when you're approaching retirement age, where you're not going to be working anymore, and you've got to depend upon your income that your monies will generate. So safety and security in retirement. I got past this, unfortunately, but here they give you guaranteed income, they give you market protection, and they're typically pretty simple to understand once you identify how you need to fit those into your financial plans. And again, back to saying assess your needs, speak with someone that knows what they're talking about, and that's what we do a lot of. And we will diversify our clients' funds so that you're not exposed to any one place that might impact your return for your retirement. There's another term out there that's called sequence of return. And if you remember, I know I do, in 2008, when the market took like a 38% hit, the sequence of return, if you tried to retire at that time, a lot of people were in trouble because they counted on a certain level of earnings coming from their money, and it didn't happen. So a well-diversified, balanced portfolio can keep you from having the grief those people had at that time. So, and again, benefits of the annuity: steady income, risk management, tax advantages, and of course, most importantly, is peace of mind. So the key is to understand them, evaluate them, integrate them into your portfolio. And, if you're at a point where you need to review, okay, here's where I'm at, where do I go from here? That's a service we can offer, but I'll shut up here now that I'm finally correctly got to the end of this thing.